Good morning, everybody. Thank you all for joining us on this BCIS webinar on the risk of underinsurance on residential property. Welcome. My name is Cosmos Camacho and I'm Head of Product at BCIS. I'm a quantity surveyor and I've worked on most of BCIS products. And indeed, I was part of the BCIS team that developed the online offering for residential properties. And I still have technical oversight on the rebuild data. During this session, I'll be covering the following areas. Firstly, what is included in building insurance? We will then explore what is underinsurance and how it affects the industry. What are the forces driving an uptick in property underinsurance over the last few years? What measures are in place to ensure that underinsurance doesn't take place? And lastly, what are the risks of underinsurance as well as the factors that could impact your organization's profit and reputation? At the end, we'll have a question and answer session, so please feel free to ask any questions you may have during the webinar. I'll try and go through as many of your questions as time permits, but for those we don't get around to today, I'll post the answers on the BCIS website. Also, this session is being recorded and it will be available for a download. At the end of the event, you'll be prompted to give us feedback. We value your feedback as it helps us ensure that we are delivering the right content both in these webinars and across the range of products. So, what is building insurance? It is important to note that home insurance is usually made up of two separate policies. The first, the building insurance, which covers the building structures and the other permanent fixtures in the home. And then you have the contents insurance, which covers valuable possessions such as jewelry, watches, and gadgets. These can be obtained separately or even from separate providers, but frequently they are bundled together as one. Combined cover is usually cheaper and convenient, but like any insurance cover, it is important to ensure that you have got adequate cover for both parties. As stated earlier, this webinar is on building insurance, so let us take a deep dive into rebuilding costs. Rebuilding costs for insurance purposes refer to the cost of demolishing and clearing away the existing structures, including the foundations, and rebuilding the structures to the original designs. This entails rebuilding to a standard equal to the existing property and in accordance to the current building regulations and other statutory requirements. The costs also include for making safe the damaged or adjoining structures, professional fees payable in connection with the rebuild of the property, and VAT where applicable. As stated earlier, building insurance also covers permanent fixtures and fittings, which include sanitary fittings in the bathroom and in the toilets, fitted kitchens, and fitted bathroom cupboards and wardrobes. It also covers interior decoration, including ornate features. Also included will be the outside buildings and structures, including garages, greenhouses, garden offices, etc., boundary walls, fences and gates, paths and driveways. However, check the clauses in most contracts, as some of them might include some of the structures above, and definitely most of them would include structures like swimming pools. Building insurance can be extended to cover for alternative accommodation during the design and reconstruction of the property, liability for damages and cost of damages or injuries to third parties, accidental damage to supply pipes for gas, electricity, and oil to your property, and breakage to glass doors, sanitary ware in your property. Exclusions include VAT for construction costs of dwellings. Buildings designed as dwellings or a number of dwellings are zero rated for VAT purposes. These also include any work that is closely connected with the dwelling or allows the building to be used as a dwelling. However, VAT is payable on professional fees and other works unconnected to the construction of the dwelling, for example, a swimming pool. Excluded also is the removal and disposal of contaminated and hazardous materials. These include asbestos and other chemicals. Charges for utility infrastructure, electricity, gas, telecoms are also excluded. So now that we've looked at what goes into building insurance, let us look at underinsurance. What is underinsurance? According to the Association of British Insurers, underinsurance occurs when the insurance cover or sum insured is less than the value at risk. The sum insured is the maximum amount of money that the insurer is obliged to pay in the event of a claim. In this case, the full rebuilding cost of the property. Value at risk is the measure of the possible financial losses for the insurer, i.e. the value of the insured property. So, what are the main causes of underinsurance? The first one is inadequate assessments. As stated earlier, cover should be for the complete rebuild of all structures, fixtures and fittings and the grounds. Structures include conservatories and ground buildings like garages, greenhouses and sheds. Assessments should be carried out by trained professionals who should carry out the appropriate measurements and should know what has to be included. They should base their assessments on appropriate data like BCIS Rebuild Online and not on the market value of the property or a mortgage valuation. The second most recurring cause of underinsurance is out-of-date assessments. Assessments should be reviewed annually to ensure they reflect any alterations and improvements since the last assessment. These include extensions to the property, conversions, and any other additions or enhancements to fixtures and fittings. Sum assured should keep up with inflation, but they should not be index linked over a long period of time. Detailed assessments should be carried out from first principles every 5 years. The last is insufficient limit on the policy which you have. Sum-insured should have a provision for changes in rebuilding costs during the insurance year and the subsequent reinstatement period. There are two main ways to allow for inflation. Firstly, lump sum addition at the time of assessment. This is a forecast to cover for the insurance period, design, planning, and the rebuild period. Indices like the General Building Cost published by the BCIS provides forecasts for up to 5 years. The next is index linking the sum insured. Most policies have an index linking clause to ensure that the insured value of the property is adjusted in line with inflation changes. However, users should understand which figure is used and when the index is applied. Is the index applied regularly during the period of the insurance? Is it only applied at each renewal? Or does it continue to cover after the loss and during the design, planning, and the rebuilding period? However, index linking has its own limitations. Most indices are adequate for the year, but they will start to drift over a period of time. Most are national indices and do not take into consideration regional variations and local hotspots. They are also mainly averages, which do not take into consideration construction and building types. For example, the general building costs will include offices, industrial buildings, flats, and dwellings. They will not take into consideration the differences in building regulations and building standards. As you know, the national governments of Scotland and Wales have taken over the publishing and revision of building regulations and standards, and there's been a slight divergence in the standards in recent years. Most importantly, index linking is not a substitute for professional assessments. So which index should you use? There are various ways of measuring the change in the price of producing and acquiring goods and services over time. So ensure you use and choose an index that is fit for purpose. I would highly recommend a recent webinar by my esteemed BCIS colleagues for a deep dive on indices and inflation. For example, since the turn of the century, inflation as measured by the ABI BCIS House Rebuilding Cost Index rose by just over 300%. Over the same period, general construction costs as measured by the BCIS General Building Cost Index went up by 240%. On the other hand, the RPI and CPI, which have been grabbing all the headlines recently, went up by 226% and 183% respectively. This demonstrates how important it is to understand the basis of the insurance you are selecting and its intended application. The most appropriate index for rebuild cost estimates for dwellings is the ABI BCIS House Rebuilding Cost Index. The ABI BCIS House Rebuilding Cost Index is a bespoke cost index for updating a rebuild cost estimate in between assessments. However, it must be stressed that it is no substitute for regular reassessment of the sum insured. The index measures changes in building cost inflation, but also takes into account changes in legislation and statutory levies such as landfill tax. It takes into consideration the impact of the changes in building regulations and building standards as they are known in Scotland. It also includes fluctuations in market factors as measured by contractors' prelims, overheads and profits, and design fees. The graph below shows the annual percentage changes in the House Rebuilding Cost Index, clearly showing its responsiveness to market conditions factors. And it's also showing a recent change in the index, resulting in an all-time high in annual changes. So what has been driving inflation as measured by the House Rebuilding Cost Index? After a somewhat slow start, the House Rebuilding Cost Index has gone up by 37% since January 2020, peaking at just under 20% year-on-year increase at the end of 2022. This was mostly in response to a series of events which has also affected the wider economy. In June 2020, the index was adjusted for the reported effects of working under COVID-19 pandemic on construction. Prices were adjusted for reduced productivity, temporary material shortages, and increased contractors' prelims. This added a 4.3% month-on-month increase. Although this has to be prefixed by the fact that in the preceding few months after the shutdown in April, it had been very difficult to collect data. In December 2020, UK formally completed its separation from EU, which restricted the movement of labour. In the pursuing months after the opening of the economy, the surge in demand resulted in disruptions in the supply chain and skilled labour. This has now been exacerbated by the war in Eastern Europe, which broke out in February 2022. This has resulted in further uncertainty in the economy and increased costs. However, the House Rebuilding Cost Index also takes into consideration changes in building regulations which were introduced in June 2022. The combined effect of adjustment to the Part L, the conservation of energy and power, Part F, ventilation, Part O, overheating, and Part S, charging infrastructure for electric vehicles, added 5.7% to the index. It has to be noted that the building regulations only came into effect later in the year in some parts of the country, namely Scotland. Now, a closer look at some of the materials used in construction, especially in house building, will reveal that most of the materials were going up over the past few years, peaking at various stages, and they have now eased a bit. To note, for example, reinforcement, which is now standing at 48% from January 20 to January 2023, but peaked at 86% year-on-year increase in June 22. Softwood, especially for carcassing and main timbers, also went up, recording a high of over 42% month-on-month in October 21, but it has eased off to 17% over that same period. However, some materials are still going up. These include, say, windows, plastic UPVC windows, and plasterboard. They are still going up and are yet to peak. So let's take a look at what happens when things go wrong. What happens when the sum insured is not adequate to cover for all eventualities, the complete rebuild of a property. This is a widely reported case which appeared in national newspapers of a family which was left £450,000 out of pocket after underinsuring their property. So what are the risks of underinsurance? So let's start off by looking at the risks of underinsurance to the insured. The property owner must provide the correct value of the insured property. The responsibility of the valuation lies with the insured, and insurers will accept the valuation that has been provided. Therefore, the insured must provide accurate and honest description of the property being insured. They should check any or all pre-filled parts of forms and assumptions of online calculators. However, they should ensure that their property is assessed regularly by professionals. There are tools out there to check the level of cover, which include the BCIS ABI calculator, but they are only for checking and should not be used for setting insurance cover. So in extreme examples, underinsurance can lead to the cancellation or voiding of the policy, with the insured losing their premiums. This is only in the cases where the insurers would not have taken on the risk of insuring that property, especially at that cost. However, in most cases, if the proportion of the insured and the actual value is above a certain threshold, the insurers will pay in full. Below that threshold, which is predetermined by most insurers, they will apply what is known as the averages clause. Simply put, the payout is equal to the claim multiplied by sum insured divided by the current value. That is, it is reduced proportionally by the underinsurance. For example, if there is a claim of damage, say for £40,000 on a property which is insured for £400,000, but the current valuation of the property is £500,000, this could be reduced proportionally by the insurers to £32,000. And above all that, insurers can also make other adjustments to the claim depending on the level of underinsurance. Now let's turn our attention to the risks of underinsurance to the industry, namely to the advisors and the insurers. Brokers and insurance agencies and all the other intermediaries have a duty to truly understand the profile of the insured to mitigate a potential claim. They must ask clear and specific questions in order to correctly represent the risk. They should also provide clear advice and point clients to trusted sources of information, for example, trusted online calculators. Surveyors and assessors need to provide assessments that follow established guidance and standards. They should give estimates that are within a reasonable margin of error. And for that, they need to use reliable and most up-to-date sources of data like the BCIS online. Disputes in any valuations could lead to a whole host of sanctions, ranging from sanctions from professional membership bodies, which could all lead to disciplinary actions. It could also lead to reputational loss, and all that adding up to higher business costs and professional indemnity insurance premiums. Disputes can be referred to regulatory bodies like the Financial Ombudsman Service, but serious offenders could be required to set up the Financial Conduct Authority Consumer Redress Scheme. In worst case scenarios, disputes could lead to litigation. Most complaints and disputes are handled by the Financial Ombudsman Service. During the last year, 22 to 23, there's been a steady increase in household insurance complaints, creeping up to be the 5th most complained about product to the financial services, Financial Ombudsman Services. And up to 1/3 of all the cases considered by the FSO have been upheld. So what happens when the Financial Ombudsman rules against your firm in a dispute? The Financial Ombudsman Service can make a financial award they consider fair compensation for any losses and can make any or all of the following awards. When a customer has lost out financially, the business is required to compensate them for the losses it has caused. As of April 2019, this can be any amount of money up to an award limit of up to $415,000 for acts of omission by a firm. Firms could also be liable for the emotional distress, inconvenience, pain and suffering that results from the proceeding, and the damage to reputation of their former clients. There can be other costs incurred which can be awarded by the FSC, including interest on the amounts owed and any other costs they deem are necessary. Now let's take a look at some of the things to watch out for when establishing a sum insured for a property. Most cost guidance and calculators are based on traditional designs. However, their application to other properties, especially non-traditional designs, including system build and modern method of construction, is affected by a number of circumstances, and the cost consequences have to be taken into consideration. The most accurate estimate is likely to be obtained by defining, quantifying, and costing all the elements and components of the building using an appropriate schedule of rates. Watch out for unconventional materials, including stone and thatch. The availability of some of these materials can be affected by, for example, the closing of a local stone quarry, which means that stone will have to be ferried across the country. Unusual and period features such as timber paneling, ornate brickwork and plasterwork can add to the cost of rebuilding. High net worth properties are best left to specialists who will apply the approximate bills of quantities. Extensions and alterations. Additions to properties since last assessment should be taken into consideration and could increase the rebuild cost of a property. Improvements such as high-spec kitchens and sustainability features like solar panels have to be taken into consideration. Other common mistakes include ignoring grounds and garden structures and not allowing for high floor to ceiling adjustments for dwellings, especially in historic and period dwellings. And lastly, the incorrect assessment of an age of property and quality of the property. Insuring floods. Floods are generally insured as a block, and policies are often written by the commercial rather than the household section of insurance companies. However, the costs are likely to reflect standard fittings, and it is advisable to insure separately enhanced kitchen fittings, bathrooms, etc. for the individual units. Some floods are indeed insured separately, but in such instances, it is important to establish the policyholder's responsibilities. For example, in some cases, the top flat will be responsible for the roof. Other forms of estimates which affect rebuild costs include bedroom rated estimates. This is where the cost estimates are based on the number of bedrooms. These are not likely to be as accurate as measurement-based estimates, and it is advisable not to rely on these over a long period of time. Lastly, and by no means the least, any discussion on underinsurance has to include listing. Any type of listing on a building will have an impact on the reinstatement costs. There are generally two types of listings. There's the national listing and the local listing, which is administered by your local authorities. Most buildings built before 1850 are listed. You will need listed building consent for all work on listed buildings. That involves any alterations, extensions, demolitions, and of course, rebuilding. There is also the added requirement to replace like for like. And materials and method of construction may have to be required to match the original exactly. Conservation areas exist to manage and protect the special architectural and historic interest in a place. In other words, features that make the place unique. And in some areas, they are subject to special controls, such as called Area 4 directions, which restrict the work on dwellings. However, the emphasis in these areas is on appearance, and appearance should match the original, and you can be allowed to use modern materials. So in summary, what are the main takeaways from this webinar? Firstly, building insurance should cover for the worst case scenario, i.e. the complete rebuild of all structures. Secondly, both the insured and their advisors have a shared responsibility to get the sum insured right. It is important to review the sum insured regularly, especially during the times of economic instability. Underinsurance could lead to financial losses to both the insured and their advisors. Surveyors and brokers can have further regulatory penalties imposed on them from their professional member bodies and other financial regulators. BCIS has tools to help mitigate the risks of underinsurance in dwellings. Okay, that's really all I wanted to cover today, and I really hope you have enjoyed this session. But stick around for a few minutes more as we move on to the Q&A session, and I'll attempt to answer some of your questions. But as I said earlier on, any questions we do not get around to answer today will be posted on our website. Right. Yeah, I can see some questions there. Let me start off with a question on inflation. The question is, how can you be sure that your insurance cover will take inflation into account over a significant period of time? I think the best way to account for inflation is to have your sum insured index linked. You should check that your insurance policy specifically mentions index linking and be sure what index is being used and when it is being applied. The index should be applied regularly and preferably monthly during the process, during the period of the insurance. And there should be provision for index linking to continue after the loss, during the assessment period, during the redesign planning, and the subsequent rebuild period. But I should stress that index linking is not a substitute for professional assessments. You should have professional assessments, regular ones, every 3 to 5 years to ensure that your property keeps up with inflation and other changes in building regulations, etc. Okay, let's move on to the next question. Why do regional differences need to be factored in? What are the common examples of underinsurance here? Oh, wow. So, yeah, I mean, construction costs are affected mainly by, say, the basic input costs, but they are also affected by the cost of the site-associated conditions and the tendering climate as a whole. But most of these things are affected by locality. The cost of materials, for example, will vary according to the delivery size, but will also vary with the distance of delivery. If you are building in, say, the Highlands of Scotland, the distance of delivering some of the components might actually make them more expensive than buying materials in other in Edinburgh, for example. Labor costs will also vary with location, depending on the availability of skilled building operatives. In particular, in areas where there is high volume of work, there might be a lot of competition, which could result in local hotspots. But there are other contributing factors. An example is the devolving of the building control to national governments. The building control regimes for building regulations is now administered by the governments in Scotland, Wales, Northern Ireland, and obviously the national government in UK. There's been a few divergences in the building regulations and a few differences in timing during which the building regulations are applied. For example, new dwellings in Wales have to have sprinklers in them, which is not a requirement in other nations. So you have to take into consideration this. And in Scotland, there is a requirement for some enhanced insulation to the fabric. Okay, let's move on to, let's take another question. Why has there been such a surge in complaints in the past few years from the customers? Oh, this is an interesting one. Not sure really, it's not clear, but there might be some few contributing factors. The turbulent weather, for example, we've been experiencing, the extreme heat and cold, and wet weather may be causing damages to our houses, which has increased generally the volume of claims. So it might just be that the volumes of claims have just increased. But we should also not discount the economic conditions, which may be increasing, which may be contributing to insurance cover not keeping up with inflation. Okay, I think those are all the questions we'll take for today. And I think we will now, as I said, I promise to get round to all of your questions after this webinar. So to conclude, thank you again for taking part in this webinar. Please follow us on LinkedIn. Just scan the QR code or search for BCIS. And watch out for future webinars and BCIS focus groups. This webinar is now over. Thank you for joining.